Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Happy Friday, Gabriel. I know you're coming in from Marina Bay Sands.
No, it's actually Resort World Beach Villa.
I see. Okay, my mistake. Good to have you on the show. Now, let's take a look at how various markets are performing before coming back and getting your insights. We're going to start with taking a look at the cryptocurrency markets. Bitcoin is at 33,049. It's down 0.79%. Ethereum is at 2,137. It's down 4.72%. And if we take a look at regional markets, we've got Bursa Malaysia, which is at 1,517.34. It's up 0.57%. The SGX is at 3,161. 3,118.61. It's up 0.35%. Across the region, we've got the Nikkei, which is down 1.84% at 27,599.69. Shanghai Composite is at 3,501.16, down 0.69%. The Hang Seng is up 0.65% at 27,330. And rounding up the numbers, we've got the ASX 200, which is down 1.55% at 7,227.6. What's the reason for the rather negative sentiment across the region, Gabriel?
Well, Brian, as you know, this has been a hellish week for Hong Kong stocks and Chinese stocks, both actually traded on the A shares, the H share market, as well as the US market, simply because of the clampdown on TT, which actually listed in the US just 2 days after the IPO. They have been asked by the cybersecurity side, because of data privacy, to be removed from the App Store. So essentially, the lead-on effect and the feed-on effect to other tech companies, has been the key market trend that's enforcing and reinforcing itself throughout this week. And you can see that tech stocks, be it actually tech in Asia or tech in the US, the Chinese tech actually have fallen.
Now, so Gabriel, given that scenario and the fact that the increased regulatory scrutiny from authorities, not only in China itself, but also in Hong Kong, should investors then be factoring lower growth for these Chinese tech companies in the next year or two? Because after all, part of the whole strategy for the Chinese government is to moderate anti-competitive behavior, which is the source of their stellar growth and profits.
Yes, I would agree, Brian. I think for this year at least, the earnings would probably be crimped. In fact, if we look at the earnings results of Tencent and Alibaba in the last quarter, it's already clear that they have already mentioned that the incremental profits will be reinvested into industries that are related to social activities that are basically being able to relating to the various acquisitions. So it is clear, essentially, that the shift also is from earlier concern pertaining to anti-monopoly has shifted now to cybersecurity, data privacy. So it's a very ongoing process that is actually undertaken by the securities market regulator plus the cybersecurity side to actually overlook and ready to have a systematic clampdown on this particular aspect of technology in China. So the ramifications, as we can see, will be quite a few. One is that after TT, it is quite clear that maybe there will be lesser of a tech listings in the US. Maybe more will come back to the Hong Kong stock market as well as the star market in Shanghai.
Okay, but Gabriel, would you then see this pullback now and this climate of caution as an opportunity to accumulate?
Well, this scenario is actually quite reminiscent of what I saw during the 2018 era, when the authorities clamped down on all games and no approval was actually given for games for 6 months. So that hit Tencent very badly. The share price of Tencent actually at that time collapsed from 550 down to about 258. And of course, for the brave hearts, myself included, thankfully, those of us who actually bought and withstand that 6 to 7 month of onslaught were able to actually emerge it and double our money subsequently over a 24-month period. I see this current period is actually quite soft. One, as I mentioned earlier, the authority seems to have moved from anti-monopoly now to privacy, to data privacy, and it's actually quite serious because the curbs on DT is actually removing it practically from the App Store. Now, to what extent will they be reinstated? Nobody knows. And to what extent is DT able to see a huge collapse in the profitability? That's left to be seen in the numbers. But more importantly, I think the message very clear, very similar to what happened to Alipay in November 2nd last year, is that for DT's case, it came 2 days after their listing. So essentially, it's creating quite a havoc for essentially people pertaining to participating in the DT IPO, as well as people who actually invested after the IPO.
Yes, because there are class action lawsuits in the US right now because of the lack of disclosure that DD was under scrutiny by Chinese authorities.
I think it's basically who do you believe with? I mean, essentially, DD management said clearly they did not know anything about what cybersecurity has actually mentioned. There's no forewarning. They didn't know about that before they actually went for the roadshow. But on the other hand, there's some reports leaking the fact that as the cybersecurity has already told DT to actually withhold or actually postpone the IPO. So it's really a matter of basically who you believe and which sources are more correct.
Now, on a different note, COVID fears are increasing across Southeast Asia, and regional stocks and stock markets are taking a battering. Where, Gabriel, are you seeing value and opportunities?
Well, I think yesterday's reaction in Wall Street was actually more knee-jerk than anything. I think it was because the catalyst was more because of what happened in the Tokyo Olympics pertaining to the number of spectators. I think the what's happening or developing in Tokyo essentially is not something that's new to investors. We have actually seen basically that the Japanese market, as well as actually to a large extent the Japanese authorities, have been the least in terms of impinging on the measures like wearing masks, as well as basically immunity and lockdown throughout the COVID-19. And so I was actually personally very surprised that the Olympics was even allowed to actually go on, considering the fact that notwithstanding the fact that a lot of measures will be taken, but it's a bold measure, and look at what the repercussions in. So the markets has to grapple with that. The markets actually took it as a reading, that COVID-19 is resurging. It's not something I agree on. I think essentially because the higher level of immunization, in fact, in the major countries like the US, many of the European countries and Singapore, most of them are hitting more than 50% vaccination level, by this particular summer. So I would think that in the second half, probably things will not be as topsy-turvy as what we've seen in the first half.
Gabriel, as always, thank you very much for coming on the show.
Thanks, Brian.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.